Hi, let's check out a few Bitcoin charts again from the website lookintobitcoin.com. We've got the 200-week moving average, the stock to flow model, the Puel multiple, the pi cycle top indicator, the long-term logarithmic regression, and we are also looking into wallet sizes. How are different Bitcoin wallet sizes growing? So we've got more than 100 Bitcoin, 10 Bitcoin, and 1 Bitcoin. Last but not least, we've got a chart regarding the Lightning Network. So how much is Bitcoin being used as a payment mechanism? But first things first, this is the 200-week moving average. And I like this chart quite a lot actually. Historically speaking, Bitcoin was rarely below this moving average. This here is just a different representation. I personally actually prefer the 208-week moving average. First of all, it fits the data a little bit better. And second, it's kind of aligned with the 4-year cycle, right? Bitcoin halves every 4 years. The new supply gets cut in half every 4 years. And so the price also seems to be moving somewhat in 4-year cycles. Some people think the cycles are lengthening over time, but there's definitely some kind of rhythm, some kind of 4-year rhythm in the Bitcoin price data. And when we look at the 4-year moving average, we can see the price was barely below that moving average ever. So we can see within a week, it went slightly below sometimes, but it never closed a week below the 4-year moving average. And I think this is a pretty good indication of where an absolute bottom might be. If we ever crash again, I think it's very likely we will see a lot of buyers around this region, simply because historically speaking, this support has held up very well. Now, what's also held up pretty well is this imaginary line here, right? That's trying to connect these prices here at the bottom, this white line. And so the question is, where should the price bounce off again? Will it be the moving average? Will it be this white line? It could be both, right? Similar to what happened here during the Corona crash or here in August 2015. So basically when those two lines are getting very close to each other, and that would mean in turn, it would mean that the price needs to go sideways or slightly down for a while, because only then the moving average can stop increasing so quickly and can start to flatten out and come closer to this white line. If you're wondering where we are with this moving average right now, the absolute bottom seems to be somewhere around 15K. But let's say the moving average tends to creep up with a similar pace, something like that, and we were to fall. I'm not saying this happens, but simply to be prepared to manage risk. Maybe we could fall if we were to go down really quickly to like 20K or so. This would be the absolute bottom. It would be a drop of 55%. This doesn't have to happen, obviously, but you definitely need to manage your risk accordingly. If you can't digest such a drop to 20K at all and you're really nervous about something like this, if your crypto exposure is too high, then adjust this accordingly, because these things can happen. Historically, we have seen quite massive drops, right? The last crypto winter, it was more than 80%, and we've seen this several times in Bitcoin. Here we had a 78% drop, and in the early days, not very different. It went down even by 88%. So obviously crypto nowadays is more mature than it used to be, but still volatility is pretty high. If we look, for example, at the daily fluctuations of the Bitcoin price, right? On some days the price goes up, on some days the price goes down. If we take the absolute value of these price movements, we get a chart that looks like this, right? So we are flipping down this lower part and just look at the absolute value. And this now gives us a measure of how much is Bitcoin moving every day. And what you would expect is when the market is maturing, when you look at a very long-term chart, that at the beginning, you see a lot of movement. And then when the price matures, when the market matures, this calms down. We get less movement at the end, right? And if we look at this over the 10-year period of Bitcoin and we put a regression line through this, we see something like this. So 10 years ago, the price was moving on average every day around 3.5%. Nowadays, it's around 2-point-something%. So the volatility is going down, but it's not going down massively. Instead of using a regression chart, we can also simply use a moving average. So we can draw a moving average through this chart. And this is now the 3-year moving average. And a similar result, we went from 3.5% of volatility to currently around 2.5%. So volatility is going down, but not massively, right? And this is kind of confirmed buy these large crashes, right? We still have 80% crashes just 3 years ago. And so seeing another, say, 60% crash or 70% crash, I don't think is completely unrealistic. I don't think we can completely rule this out. So simply manage your risk and be prepared to be able to take advantage of those prices in case we really ever see a $20,000 or a $25,000 Bitcoin again. Nothing is impossible. So yeah, I like this chart quite a bit. The current support here is at 15K, but obviously the line is increasing and we're not going down to this level tomorrow. So 20K as the absolute bottom is probably more realistic. Now there's a very popular model in crypto called the stock to flow model. And this is quite an interesting chart. So the prediction of this model is that the price basically 10x's every 4 years. And the idea behind this is that the new supply of Bitcoin gets cut in half every 4 years. And so since Bitcoin becomes more rare, the scarcity tends to push up the price. So halvening the new supply 10x's the price. Now where does the 10x come from? That comes from a cross-asset analysis. So basically the guy who created this model, his pseudonym is Plan B. He looked at the market cap of other commodities. So he looked at the market cap of gold or of silver, and he checked what's the new supply, the annual new supply of those commodities. And how does this supply relate to the market cap? And so you've got a market cap to new supply relationship. And so when you reduce now the new supply of Bitcoin, you can infer a new market cap based on that. Now the general idea behind this, I think, is not too bad, but there are flaws that I think are overlooked because the model does break. I mean, here the price fitting looks quite okay, right? We are above the prediction quite a bit. We are below the prediction quite a bit. But in the end, the fitting seems to be nice. And so it does look like, okay, we could be close to $1 million per Bitcoin in, say, 2025. So it's very optimistic, but based on the fitting, it also seems to be realistic. Now, the problem is that you could extrapolate this into infinity, right? And Bitcoin is definitely not going to 10x for the next 100 years, but the new supply is going to be cut in half every 4 years for the next 100 years. So Bitcoin clearly cannot become several trillion per coin, right? That's impossible. So at some point, the model must break. And it already breaks when you look at other cryptocurrencies, right? If you just look at the new supply of, say, Ethereum, it recently went down quite a bit after the software upgrade, but the price didn't adjust accordingly. And so you've got other coins with a similar new issuance, some coins even with no new issuance at all. And obviously their price is not unlimited, right? It doesn't go to infinity. And so as a guideline, I think this model is interesting, but I wouldn't take it to the bank. I would not expect that we have to be at $1 million in 2025. It's a nice projection, but I think there's no need to be disappointed at all if we don't reach it that quickly. At some point we might, right? Bitcoin is limited. Fiat expands over time. There's money printing going on. That's not happening that quickly for Bitcoin. So obviously over the long term, the price has to rise. The only question is, does it have to be a 10x after the next halvening? It could be, but it doesn't have to. Now here's a nice indicator, the Puel Multiple, that looks at minus revenue. So the daily issuance valued in US dollar is divided by the 360-day moving average of that issuance. And we can see that historically it timed the market cycle tops quite well, right? We've got a few market cycle tops here, one in 2011, then one in 2013, then end of 17, and now just recently, middle of this year. And we can see the tops in this Puel multiple, they coincide with those price tops. So this seems to be working quite nicely. And if you are wondering where are we currently, we are neither very expensive nor very cheap. Similar to what a lot of other indicators say, we are pretty much in normal territory right now. The logarithmic regression over the long-term price history says the exact same. We are a little bit cheaper than usual, but not by much. The low here is at around 22K. The top here is at around 135K. So this is now the logarithmic regression. Similar statement, we are neither cheap nor expensive at the moment. So it probably makes sense to just go as usual to dollar cost average in, buy something every month, maybe fine tune this buying a little bit. There's a few approaches mentioned on this channel as well. You can use, for example, the hourly RSI. Just watch a few videos on this channel and you will know how I personally time my buying for Bitcoin and other cryptocurrencies. Now the Pi cycle top indicator is very interesting as well. This is an indicator that was retrofitted. It looks at two moving averages, the 111-day moving average and 2 times the 350-day moving average. And when you divide those numbers, you get pi. So that's just a coincidence. And what's interesting is when you look at the past, that the crosses of those moving averages, they have predicted the market cycle tops quite well. So this was pretty good. This top was indicated quite nicely as well. And the recent top over here, this one was not retrofitted. So this was actually a prediction. And it turned out very well again. So on the 13th of April, we did have a top and since then went down. We're obviously nowhere near now to cross those moving averages again. But whenever we get heated again, it does make sense to look at this indicator. Nobody knows why it works. It was simply retrofitted for those market cycle tops. And through some magic, it also worked for the last cycle top. If it works in the future, nobody knows, of course. But maybe this is some kind of self-fulfilling prophecy, right? If enough people look at this, and there was quite a bit of hype around YouTube when this signal was triggered, if enough people get scared, right, they might sell and thus just trigger the bear market simply because of that signal. And so we've got a self-fulfilling prophecy. This might be one contributing factor of what happened after the 11th of April of this year. Now, this is something I just want to quickly go over. This is the wallet size. How many wallets can we find for a certain balance? And for the very large wallets, we can see basically a stagnation since 2015. And that's a positive thing, right? This is not increasing anymore. So Bitcoin does get more decentralized over time. We can see the stagnation happen a bit later for the wallets with 10 Bitcoin. So here we are stagnating since 2017. And for the ones with 1 Bitcoin, even later in 2020. So it looks like over time, Bitcoins are moving from the large wallets to the smaller wallets. There's more usage, more adoption, more players in the space. And that's exactly what you want, right? You don't want just a few people dominating the whole market. You want that the broad masses are using Bitcoin, and that seems to be what's going on. Last but not least, a chart around the Lightning Network. So this is the technology that allows for very fast and cheap transactions. The Lightning Network basically helped El Salvador to use Bitcoin as a payment mechanism. Otherwise, Bitcoin would be way too expensive, right? If you use the blockchain directly for every transaction, you would have to wait quite a long time. You would have to pay quite a lot of money. But with the Lightning Network, that goes away and we can see adoption growing. And that's exactly what we want. Bitcoin moves from a store of value to a true payment mechanism, to a real method of payment. And that's very encouraging. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you haven't yet, feel free to subscribe as well. I publish a video every single day. Last but not least, we've got a Telegram channel, the Bitcoin Strategy channel. You can find us either by clicking the link in the video description or simply by searching for Bitcoin Strategy channel within the Telegram app. We are currently around 700 people. We enjoy discussing altcoins. We enjoy discussing the general crypto market. Would be great to see you there as well. The Bitcoin Strategy channel on Telegram. Thanks for watching and see you next time. Bye bye.